Hello, investors. It's Don Vandenbord, Chief Investment Manager, Chief Investment Officer. Who am I? With Revere Asset Management. Today is Tuesday, April 30th, wrapping up the fourth month of the year. It is 5:38 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Revere Roundup Daily Market Insight video. State of the market, we continue to be in a mild correction. Any strength that we saw over the last three sessions undone today in a ugly red day and an ugly close as well. Check the trend gauge over here. Market leaders neutral at best. Short-term trend yesterday with the yellow arrow and 4 of 5 closing one day above the 21 day. We've got them back below the 21 day now. So all five of them, all five of the major indexes below our short-term trend indicator, also below our medium-term 50-day moving average trend indicator, all five above the long-term 200-day moving average. Remember, the market never gets into serious trouble until the 200-day moving average is breached. So what happened today? Opened down about 0.25% and just went sideways for about 90 minutes. And the thought was at the time, or our interpretation was that, it'd just be a boring day going into the FOMC and additional data that we're going to see tomorrow. And but after that 90 minutes elapsed, we had a nasty four-wave down intraday swoon, including a waterfall-esque last 10 minutes. Ugly day, ugly close. Here are the numbers. No way to hide it. Our 21-21 leaders list down an average of 2.4%, only one positive. That would be Kava. 20 negative. Big Eight. This is the Magnificent Seven plus Netflix down an average of 2.45%. Tesla after a big update tomorrow. Well, I saw something that full FSD approval in China was not really full FSD approval. That fell 5.6%. RG8, this is our 8 growth ETF composite, took it on the chin. This is the feedback that we need, though, to let us know what's in favor with the market. And it certainly wasn't these stocks today, down 2.23%. S&P 500 closed at the low of the day, down 1.57. Equal weight S&P 500 down 1.44. NASDAQ 100 down 1.89. Equal weighted down 1.8. Dow down 1.5%. Mid caps down 1.75%. Russell 2000 small caps down 2.1%. 60/40 global diversified stock and bond down 1.04%. In-house GROTECTION down 1.13%. Let's get into the charts, and we'll start with the S&P 500. And you can see after this gap down and close at the high, which our interpretation of that was that would put in a short-term low because it was on some negative news. And that followed up with a gap up and then another higher close. But that took us right into this 21-day and 50-day moving average resistance level. And that's where we failed today with the big move down 1.57%. If you look at a 5-minute chart here, you can see the sideways move and then wave 1, sideways, wave 2, sideways to up, wave 3, and then waterfall into the close. I hadn't seen a weak close like that in quite a while. I don't know if that has something to do with April month end rebalancing or something, but that's a pretty harsh move down there over those last 10 1-minute bars. So where are we now? Well, we failed on a move up into what used to be support and is now acting as resistance. And with a lot of data coming tomorrow, expect volatility. The question, of course, is, will the volatility to the downside use this purple line? That's the 100-day moving average coming into the 5,000 level. Will that act as support? Or if we get surprise positive news from Jay Powell, everybody is expecting him to be more hawkish because of the stagflation type data that has been coming out recently. On the upside, what was recently rejected or held as resistance, those are the levels that bulls are looking to get back above. NASDAQ 100, similar action, one close above the 21, failure back down, and a close basically just a hair below the 100-day moving average. Never did get up to test or touch the 50-day moving average, and down after hours too by 0.4% on some weak earnings data that's hitting the tech sector a bit. Let's go to the Dow. Dow failed into the declining 21, broke the 100-day decisively, and is near the lows that were created about 3 weeks ago, back below that 38,000 level. Mid-cap index, one close above the 21, back below it again, still above the 100-day moving average, still below the 50-day moving average, which is flattening out now. And Russell 2000 small cap index, one close above the 21, back below the 21 and the 100-day moving average, about midway between the now declining 50-day moving average and the flattening out 200-day moving average, and that's about 3% from each. So those are the major indexes. With the volatility and move down, you would expect the VIX to pop, and it did, up 6.7%, still below that 16 level and into the declining 21-day moving average. US dollar, we talked about the yen and the government intervention yesterday, which brought the yen up and the dollar back down. That was a one-day event. The dollar back up, and this is a big move for a dollar. For the dollar, up 0.68%. While if you look at FXY, this is a chart of the dollar to the yen. Again, one-day wonder and down 1.1% back to last Friday's lows. That's not a good sign for stocks, that strong dollar. From the dollar to precious metals, they got hit hard today and broke their 21-day moving average. Here's gold, down 2%. GDX, this is gold and silver miners, down 4.72%, sitting right on the 21-day moving average. Silver, down 3.14%, breaking that 6-day consolidation back to the top of the prior base that it broke out of near the 24 level. And IBIT, Bitcoin, no solace there either, down 6.4%, breaking recent lows and breaking through the bottom of that flat base that was set up. So that sets up a new low for that base. On to bonds. Yields were higher all day, meaning prices were down. Broad bond index, BND ETF, down 0.38%. TLT, the long bond ETF, down 0.85%. TYX, the 30-year yield, up 1.1%. So we talked yesterday about a possible false breakout after the two-day move lower in yields, but popping back up today and recouping the pullback on yields. And TNX, the 10-year, recouping the last 2 days as well, up 1.56%. Not much good news for bulls at all today. So those are our inter-asset correlation charts. Let's go to the tail of the tape. Stochastics have flipped down for all the RG8 and also the 5 indexes. They haven't crossed through the moving average yet, but they go from positive to neutral. Bear case back on the front burner with the break below the 21-day moving average. So 3 pieces of data that came out today that supported the stagflation narrative. 8:30, the employment cost index. I guess the Fed looks at this a lot. Above expectations. This is basically inflation for workers' salaries, and that dumped the futures versus where they were just about flat. Then 9:45, Chicago PMI came out. It was weak, another weak economic data point. And then at 10 o'clock, consumer confidence came out, and that was below expectations. So a triple whammy there, hitting the market as well. So our day count goes from 5 out of the last 6 up to 1 down, back below the 8-day exponential moving average with the slope rolled over, back below the 21-day moving average with the slope rolled over. And that flips our expectations from neutral to negative. The Fed and the data tomorrow and the reaction to it will have a lot to say about the expectations going forward. Sectors, MSOS, this is the marijuana sector. This got big news out that the government is going to push for a downgrade into the schedule of where marijuana is treated, cannabis is treated. So big pop up on that, 24.8% on the MSOS. This is U.S. Companies that trade over the counter because that's one of the laws that's required right now. They're not on any of the major exchanges. So that and the dollar up and bond yields up to the downside. All 11 spider sectors, gold, and silver stocks, uranium, oils, copper, and Bitcoin, all the commodities, in other words, took a step backward today. In the portfolio, we got stopped out on our hood position and we trimmed a third of our SPLG exposure with a move back below the 21 and failure into the 50, reducing our exposure from 0.85 to 0.67, or 2/3 of the risk of the S&P 500. Bottom line on the day, ugly day with a waterfall close. Now tomorrow before the open, we've got QRA. That's the quarterly refunding announcement. This is the Treasury and the schedule of bills and bonds. Then at 1 o'clock, we've got a 30-year bond auction. Those have been closely watched lately because there's a big fear that nobody wants our long-term debt anymore. And then FOMC at 2 o'clock, 2:30 is Jerome Powell's press conference. So we'll be glued to the markets tomorrow, seeing what's going on here. But you can see back down here, breaking back down below the 21-day moving average after a 2-day move higher, back above it, actually 1-day move higher, back above it. And we will see what tomorrow brings. And then oftentimes the reaction to the FOMC Wednesday afternoon is not it does not follow through to Thursday. You really have to see what Thursday's action brings to see if May is actually that sell in May, go away. Old saying from Wall Street has not really been accurate recently. May has been a positive month, so it's more like sell in June to avoid the swoon. But seasonality had kind of played out recently. April, the last part of April was supposed to be strong. It wasn't as strong as expected. The early part of April was weaker than expected. We'll see what comes in come May. So let's take a look at the portfolio very quickly. We'll fly through those tickers there, and then we'll highlight some 21 over 21 names and how strong and or weak they were. So our biggest position is NVIDIA today. That's still above the 21 and 50-day moving average, below average volume on the pullback, but down another 2.5% after hours on let's talk about these earnings that are hitting after hours. SMCI closed at 858, initially chopped above 900, now all the way down to 745. That's a one-time move to the downside. The expected move on SMCI was $110. Hell of a move down there and quite a reversal after being almost up one time, the expected move. So that's SMCI. Next up, AMD. Also disappointing, down 8% after hours. One internet name that is, really it's more a social media name, Pinterest, up 17% after hours. That's going to take it into this 40 level. Prior highs were back around 42 at the end of January, 52-week highs anyway. And TMDX, this is one that's kind of growing up before our eyes, up 10.5% after hours. This is right on the edge of the $100 million daily dollar volume minimum liquidity that we require to put something in the GROTECTION portfolio. But great numbers, great fundamentals, great story. It's about organ transplants, and it's tied to organ transplants, and nice move after hours on this. Let's see. I know we had one more that was bad. Yeah, Starbucks after hours, ugly quarter, down 11%. the chart was already very broken. So we touched on AMD, SMCI. Oh, Amazon after hours. Great numbers. Was up around 182, 183, now just up about 1%. Amazon gapped down in sympathy with another earnings report last week by one of the big seven, broke back below its moving averages today. Now just kind of disappointing to see it flat, but their data center numbers were pretty strong. But again, you got to have the market at your back in order for these ideas to work. The M and the N in cancel M to me are the two most important letters. You got to have the market, and then you got to have something new in some new catalyst in the stock in order to carry it higher. But you're swimming upstream if you've got something new and you don't have the market as a tailwind. All right, so we looked at NVIDIA. The one stock out of the 2121 that was up was Kava. Very strong stock, great volume patterns. If the market rights itself, this is looking like it wants to be a leader. Hood is what we got stopped out on, breaking below the 21 and the 50-day moving average after a little false breakout yesterday. VRT, also a good reaction to earnings, down 2.5% after hours, along with in sympathy with the SMCI, but down 2% today, still at the top of this range after its earnings report. Down today, but on the weakest volume versus the last 4 days. That's what you want to see. This is another one where the market seems to be holding it back. ALAB, still above this 80 breakout level, but down after hours as well. And for solar, we all have, these are all small starter positions, pilot positions to see if we could get some traction. First Solar still above the 21-day moving average. CEG, another data center play, down 1.4%, still above the 21-day moving average. And finally, Spotify, great initial gap up on earnings, no follow through after that, breaking below the 21 today. So although 20 names were down, only 3 of them have broken below their 21-day moving average, that being CCJ, which I'll show, and that's a negative reaction to earnings. Hood, which I already showed, and Spotify, which I also just showed. So let's take a look at the worst performers in the 21 over 21 today. These are the worst 6. GE Vernova making new highs, then reversing. FCX, strong stock, up 4 straight days, giving some of that back. All commodities were weak today. GDX, we already looked at this. This is gold and silver miners, down 4.7%. Robinhood, which we got stopped on. IBIT, Bitcoin, we already showed this, weak as well. And CCJ. IBIT's actually not in the 2121, but I keep it in here because it's easy access to what we own. And there's CCJ on the way down. How about what was down the least today, or what held up the best? We showed Kava. The next 5 after that were Raytheon, which continues to trade in a tight range. Goldman Sachs just barely pulling back on lighter volume. Generac reports before the open tomorrow. ALAB, we own that. We showed that. And Micron. That actually broke the 21 as well and is down another 1.7% after hours on whatever's going on with the AMD and SMCI conference calls is not being well received. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. Our flagship portfolio is named GROTECTION, has a dual mandate. And that mandate is to grow assets during market uptrends using our technical indicators. Pull back a bit, we go sideways, but the protection part is what anybody can get you in, but who's going to get you out? That's a famous William O'Neill saying. And that's what we specialize in here at Revere, is preserving the capital, the hard-fought capital that we've gained during uptrends. You don't have to give it back to the market if you've got a set of rules tied to capital preservation. So really, what we do is when all the moving averages are stacked and leaders are acting well, we put the pedal down to grow client accounts. That happens 2-3 times a year. The other times we back off. If it's not in our favor, we focus on uh, the broad indexes and what they're going to do, whether they rotate from growth to value or back, and some other ETFs. And that's the situation that we're in right now. Our beta hasn't been above 1 since we broke that 50-day moving average. That's one of our rules. And I'll close this with just a little 12 bullet point. You can pause this if you want to read through it, but basically this is what we are at Revere and how we run things. And with that, I'll wrap up the video for Tuesday, April 30th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.